Hey everyone, it's Brandon from the Young Investors Podcast. Myself and Hamish are excited to bring you your weekly rundown of the latest business and investing news from around the world. A quick reminder before we get started that any advice provided by myself is general and does not consider your financial situation, needs, or objectives, so consider whether it's right for you. Brandon Kolk is authorised to provide general financial product advice in Australia and is authorised representative 1305795 of Guideway Financial Services Proprietary Limited, AFSL 420367. Please see the description box for my financial services guide. Past performance is not a reliable indicator of future investment returns, but with that said, let's get into another episode of the Young Investors Podcast.
All right, welcome back everybody to another episode of Where is Brandon? Because he has a new background behind you.
Where is Brandon today?
Welcome back everybody. How are you doing, Brandon?
Good. I'm actually just in my living room this time, you know? Just thought, why not?
Right.
I just, no, definitely not. I'm in a place called Bunker Bay in WA, which is about 3 hours south of Perth. And yeah, I'm just here for a couple of days away. I thought I was going to have a little mini getaway, but I've just been working the whole time.
Really? Yeah.
That's
wow.
okay. Yeah, just doing.
Yeah, I saw.
Yeah,
I saw someone posted. So I saw either you or Tash posted on Instagram, and you looked like you were working from the pool. It looked all very nice.
Yeah, that was yours
it's
truly.
Nice place to be to be working from. I wish I was working from the side of a pool.
Yeah, you have to come next time. But yeah, it's nice. I don't know if you can even just make your workday just 10% nicer by just changing your scenery. I don't know. It's definitely nicer than just having to wake up, go in the second bedroom, you know, do your same old usual routine.
Yeah, I reckon, that's definitely a thing. I think like adding some kind of novelty to your work, like whether it's changing the like location or whatever it is, I think that definitely helps with motivation. At least for me personally, it's definitely something that I've found.
Yeah, definitely. Even if you go to a cafe, or I used to go to the library and not leave until I'd done a certain amount of work. Yeah, it definitely helps. What have you been up to anyway? How you been?
I have been, this might be shocking, but I've been doing a lot of editing.
Oh,
I know,
it was going to go two
really
ways there. It was either going to be I have been sick or I have been doing a lot of editing. It was one of the two.
No, I haven't been sick in a while actually. Touch wood. So
touch wood. Yeah.
No, but I've just been I've been in the weeds as always. It's quite a busy time of year, I think. At least for me, it has been, because it seems like brands are starting to want to sponsor more videos, and so working through organizing kind of the fourth quarter of the year has been the last few weeks really. So it's been busy but good. One
brand that I was talking to wanted an ad slot for the end of October, right? Mm-hmm. And I was like, okay, no worries. And then they got back to me and said, actually, can we push this by a month? So they effectively were trying to pay a lower rate for October. And then they were trying to do a sneaky and push it to what happens to coincidentally be Black Friday. And for those that don't know, Black Friday, you just get bombarded with so many brands that want to do their Black Friday promotion. So normally ad rates are a lot higher around Black Friday. And it's not uncommon for creators to charge double or triple the amount that they normally would. It's an important time for creators to be able to make money. So it was just so interesting that they tried to agree to this lower rate and then do a sneaky actually, let's push it to next month and let's target the end of November.
That's actually quite good. I don't think I've ever had a brand try and pull that. Can we just push that for 3 weeks? Maybe, I don't know what that weekend looks like for you, but I don't know if you...
And we're changing the discount code to Black Friday 25.
Exactly. It is funny though, because you'll get those brands that like you've had discussions with throughout the year or something, and maybe it just fell through, and then right around October it's like, well, actually, that number you said a couple months ago, we're actually good with that. Now I'm like, well, that number's gone.
And December as well. December's another time in that lead up to Christmas when everyone's on holidays and they do have the time to interact with businesses. I feel like December's another hot month.
Yeah, it's kind of funny doing YouTube because it is pretty much the opposite, I think, to everybody else. Everybody else like takes it easy towards the end of the year, but for us, it's like more people are watching because they have more free time, and more people are spending money, so the brands are more active as well. So it's it is kind of like that.
Anyway, that's this week's insight into the world of being a YouTube sensation called Hamish Hodder.
Oh, yeah, sensation. big asterisks on the end of that.
Dude, you should update your LinkedIn. YouTube sensation. Brandon van der Kolk.
Yeah, I think it currently says I make videos or something. Yeah, something like that. It's like quite the opposite. Yeah.
Oh dear. All right, Hamish. Well, let's get into this podcast. Hey, what do we got to talk about? I'm going to be talking about Meta. This is not what you'd expect here. Meta firing AI staff. Normally, they'd be like sucking them in, just. But no, they're getting rid of them. And also Tesla have announced their earnings. So I will go through that because it's been a very interesting time period for the old Tesla and the old Elon Musk. I feel like we haven't done a bit of a deep dive in a while on Tesla. So we'll talk about that. And then what are you talking about, mate?
Yeah, I've got a couple of stories to add on to your Meta kind of automation story. We'll talk about Amazon planning to replace 500,000 jobs with robots from some leaked internal documents. And we'll talk a little bit about, as well, ChatGPT's newest browser to compete against Chrome that they launched. And I've got some meme stock. We've got a new meme stock this week.
Do we? Do we actually?
The meme
That's
stocks
crazy.
are not dead.
Oh, okay.
So we'll talk
Keen
about
to hear
that.
Hamish's meme stock of the week.
Yeah.
It's the same
meme
jingle.
Stocks and fraud.
The segment changes, but it's always the same jingle.
Whatever useless story I've brought in to talk about.
Hey, you never know. It could be the next big sensation. I'm going to dump 85% of my portfolio into whatever stock this is.
Well, that's actually my recommendation, but thanks for spoiling the story. Anyway.
All right, let's get into it.
Today's episode is brought to you by Seeking Alpha, your one-stop shop for stock analysis, market data, and news. Access expert analysis and news for thousands of stocks. View buy, hold, and sell ratings from members, Wall Street analysts, and Seeking Alpha's own algorithm. Screen for stocks using a variety of fundamental and technical analysis metrics. Access 10 years of financial data and company filings, and manage your portfolio by tracking your investments with price alerts so you never miss a buying opportunity again. Click the link in the episode description to try Seeking Alpha free for 7 days, and for a limited time, get $30 off your first year.
All right.
Do you want to start with this Meta? Start with this Meta story.
Yeah, so listen to this, Hamish. Meta will lay off 600 employees within its artificial intelligence unit as the company looks to reduce layers and operate more nimbly, a spokesperson confirmed to CNBC on Wednesday. So very unusual. Imagine the setup, right? You've worked so hard, you've gotten your degree in AI, you've gotten this big fat paycheck, you're in hot demand, you decide to take the Meta job. You're like, okay, sure. Meta sounds good. Could have gone OpenAI, could have gone Amazon, could have gone Tesla. No, I'll go Meta. Let's work on some stuff. You get a big fat salary, and then a few months later they say, actually, no, we're laying you off. It's ridiculous. Yeah. The company announced the cuts in a memo from its chief AI officer, Alexander Wang, who was hired in June as a part of Meta's $14.3 billion investment in Scale AI. Workers across Meta's AI infrastructure units, fundamental artificial intelligence research unit, and other product-related positions will be impacted. However, the cuts did not impact employees within TBD Labs, which includes many of their top-tier AI hires brought into the social media company this summer. People familiar with the matter told CNBC. Those employees overseen by Wang were spared from the layoffs, underscoring Meta CEO Mark Zuckerberg's bet on his expensive hires versus the legacy employees, the people said. Within Meta, the AI unit was... Sorry, do you have something to add there?
All I was going to say is, in case anyone hadn't seen it, Meta's been very, very aggressive with some of these pay packages that they've been offering the very, very top AI people that they've been kind of trying to poach and have successfully been able to poach from like Perplexity and OpenAI. Some of these packages were like, I think $1.5 billion over multiple years. I think it was like 6 years, 1.5 billion were a couple of the pay packages. So like these are, paying some of these people astronomical amounts of money to come.
And it says the reason why later in this article. It says CEO Mark Zuckerberg had grown frustrated with Meta's progress in AI, especially after the release of its Llama 4 models in April, received a lukewarm response from developers. So yeah, he's been a bit frustrated and he's just gone after this top talent. But now he is scaling back. It says, within Meta, the AI unit was considered to be bloated, with teams like fair and more product-oriented groups often vying for computing resources, the people said. When the company's new hires joined the company to create superintelligence labs, it inherited the oversized Meta AI unit. They said the layoffs are an attempt by Meta to continue to trim the department and further cement Wang's role in steering the company's AI strategy. So I guess maybe it's a little bit of consolidation here and trimming the fat, but very unfortunate if you're somehow one of the very, very few people in the world that have got a big fat job in AI and yet you're getting laid off.
Yeah, as soon as I heard this story, I just like to imagine like a few employees, like they're just working on the AI stuff and they're like, oh, we just figured it out. We've worked out how to make AI agents that are just as good as us. And they look over their shoulder and it's just like, all right, get out. Thanks for that.
So, cheers,
thanks for automating your own job away.
Yeah,
get out.
It's so true. I guess it is very true. But there you go. I don't want to get too into the weeds of this story. Following the cuts, Meta's superintelligence labs workforce now sits at just under 3,000, the people said. Yeah, Meta has been aggressively overhauling its approach in AI in recent months as it works to keep pace with rivals such as OpenAI and Google, pouring billions of dollars into infrastructure projects and recruitment. Yep, that's what you were saying before. I don't think there's actually all that much more in this story. The company also said it's paying 16 weeks of severance. So that's like $25 billion each. So that's not bad. So, I'm still going to make a few million with my 16 weeks of severance. Oh, dear.
Jesus.
But anyway.
Yeah, crazy. Yeah, that's insane. Yeah, and I mean, there's certainly... Meta is certainly not the only company that I think it has been in the kind of downsizing automation mode. Because there was a story this week that the New York Times was able to get access to some internal strategy documents from Amazon. And essentially the overarching, or well, at least the title that they kind of put on this article that they, or this journalism that they did, was that they plan to replace 500,000 jobs with robots over the coming years.
500,000,
which is quite a lot. And when I first read that, I was like, wait, how many employees does Amazon even have?
Yeah,
because 500,000 seems insane. But yeah, Amazon's workforce is enormous. So even just in the last 7 years, since 2018, their workforce has tripled in the US to 1.2 million. So they have 1.2 million people employed just in the US, and that's, yeah, as I said, tripled just in the last couple of years. So
they're saying they're almost going to ditch half of them or replace half with robots.
Well, okay, so it's a little bit the way they've come up with 500,000 is a little bit. I'll read through kind of their explanation, and then we'll kind of understand what that means, because it's not as if they're hoping to like literally lay off a large amount of their existing workforce. It's more of kind of a forward-looking. As the company grows, they hire at kind of a slower rate, and so. The kind of article says Amazon's automation team, and this is from kind of leaked internal documents, expects the company can avoid hiring more than 160,000 people in the United States that it otherwise would have by 2027. So that was kind of one of the documents or something that they saw. And effectively, they believe this would save 30 cents on each item that Amazon picks, packs, and delivers to customers. So they think they can save 30 cents on an item.
Yeah, thank
by
goodness.
going through this process. I was going to buy that thing for $20 the other day, but if that was $19.70, I would have bought it. So
yeah, exactly. I'm so glad that the $200 lawnmower that I was looking at on Amazon is now $199.70. Great win for me.
Huge win. At facilities designed for super fast deliveries, Amazon is trying to create warehouses that employ few humans at all. Documents show that Amazon's robotics team has an ultimate goal of automating 75% of its operations.
Okay, interesting.
Which I mean, that's none of this is really surprising, I think, but because this is the way Amazon has been going for a very long time. They're one of the leaders when it comes to warehouse automation. There's some really, really impressive videos online where you can kind of see all the shelves kind of move around with robots and how they organize products, and they obviously need to be using a lot of robotics to be able to be as efficient as they are. And have been with just how big and important they are in terms of the not just the US economy but all around the world as well.
It'll be interesting. I think there's kind of two sides. Maybe Amazon's a different company, but I remember with Tesla back in the day when they were building that Model 3 production line, they tried to automate everything with robots. Like they were saying at one point there was like a fibrous kind of fluff type substance that they were trying to pack on top of the or around the battery pack so that it like noise dampened the cabin a little bit, and they were trying to automate that. And I remember at the time Elon was saying that they had gone way too far into the realms of automation, and that actually there's some things on an assembly line that just humans do way better. So I find that really interesting because they went for full automation and then they kind of stepped it back because they found out that actually the most efficient solution was to have some human kind of element. So I think it'll be interesting going forward, but then I guess you've also got Tesla at the moment that are literally trying to create a human robot. So it'll be interesting to see every company wants to automate because you don't have to pay humans. That makes sense. But then it's so interesting that it seems like you get to a point and then you kind of start losing efficiency from over-automation. And of course, this would change from business to business. I mean, if you're just trying to ship boxes around, maybe it's a little bit easier to just automate everything. But it's interesting to see, like, as time progresses, where that line is. And because I feel, it's like everybody says like everybody's going to lose their jobs to automation. I don't actually think that's true. But obviously a lot of jobs will be lost. So I don't know. I think this kind of sounds like, oh no, Amazon's going to fire all their workers and replace them with robots. I don't think that will actually come to fruition. But again, I don't know.
No, I think, I don't know. I'm less optimistic about, or at least I think it's more of a whiles away, kind of these kind of humanoid robots. Because, I mean, you could imagine like a future where, you have a humanoid robot and it is integrated with some kind of pretty intelligent artificial intelligence, then I mean, it could probably do a lot of even the really nimble things that that just can't be automated now. But I think that's probably a fair way away, I would think.
Yeah.
But I could be wrong about that.
Another interesting anecdote, sorry, I'm derailing your story, is that on the Tesla earnings call that I was just talking about, Elon went on this big wild rant about why they're struggling so hard with Optimus's hand. And it's like, you don't understand how crazy of a technology this is for us humans to have. Like to have 4 fingers and a thumb, opposable thumbs, to actually have that is so hard to replicate in a machine. And that's like one of their bottlenecks is like creating a hand that's actually amazing, like what we can do with our hand. So I think you're right. I think it's a ways away. Anyway, sorry, I'll stop derailing your story.
No, it's good. So I mean that was kind of effectively the story. There was another kind of document that went through and spoke about how by 2033 Amazon expects that they'll be selling or doing sales at least double what they're doing now, and so all in all, it effectively said that even though as a company they're going to be doing much bigger sales through automation, that they would not need to hire as many new people, and as a result, that would be robots effectively replacing over 500,000 jobs. It was 600,000 jobs,
right?
With robots. Amazon did have a response to this piece that was put out. They said in a statement that the documents viewed by the Times were incomplete and did not represent the company's overall hiring strategy. A spokeswoman for Amazon said the documents reflected a viewpoint of one group inside the company. So just kind of part of the company, I guess. And noted that Amazon plans to hire 250,000 people for the coming holiday season, although they declined to say how many of those roles would be permanent. Which I thought was kind of funny that the spokesperson in their statement was like, yeah, but we're hiring for the holiday season.
It's such a Trump thing, isn't it?
Yeah, it's just such like every company does that, hires for the holiday season, and then lays, most of those jobs aren't permanent. So yeah, it's a bit of a cop out answer.
It's like, well, you see, there may be some we're yet to fully appreciate how many jobs it'll be. Automation's a great thing, but in the meantime, we are hiring. We're hiring a lot of people. It's going to be great across the holiday season. Everybody's going to have a job. It's just swing the story.
Oh, yeah, I just wanted to tack this on the end. This is not really a story, but did you see, somewhat related to automation and AI, did you see ChatGPT's new web browser that they've launched?
Called
browser?
Atlas? Like
yeah,
Chrome?
They launched this. This was just a couple of days ago, and it is actually a Chrome-based browser, which I thought was kind of funny. So, it's
interesting.
It uses kind of the back end, I guess, of Chrome, but essentially it's got ChatGPT integrated right into it. So, the idea is, instead of browsing and then I don't know, copy and pasting stuff into ChatGPT as summarize this or look at that, you can just kind of chat with ChatGPT right in the browser and use the agent mode as well. So ask it to take control of the computer and that sort of thing.
I don't know, man. There's something about this agent mode that doesn't sit with me.
I wanted to get your opinion on this, because my initial thought was this is not safe enough yet to be just putting in the hands of so many people. Because people are coming up with ways to hide code or hide prompts for AI in web pages that essentially takes control of the agent mode.
Really?
And can obviously get access to stuff. I mean, if you give the agent control of your computer and then it goes to a website that gives the agent a prompt to basically, I don't know, whatever, to go to your banking website or whatever, or to go to your emails and to grab something, and you're not watching it, I feel like it could go wrong very easily.
Yeah. Message Hamish's ex. It's kind of scary. The least of your worries.
It wasn't me. My agent went rogue. I didn't reach out.
Rekindled romance. Thanks to an AI agent. Oh, that's hilarious.
What do I do?
No, true. I don't know, man. It's there's just something, I don't know if I could just give it control of my computer. I mean, you just know 99 times, maybe 999 times out of 1,000, it'll be fine. And then one day, all your money will be gone.
Yeah. Well, I've been kind of messing around with it, but I'm absolutely not logging in to anything that's important in that browser, because I just like testing stuff and messing around. And just kind of seeing what it can do. But
the thing that concerns me is I've seen there's hackathons, hacking conferences and stuff. And I've seen news reports on this where the news presenter tells the hacker, see if you can get into my bank account. And then the hacker, it's a hot knife through butter. They just can easily get into these people's bank accounts. So I'm wondering, man, if they do that as a white hat hacking demonstration on live TV, and that's just humans that are doing it, what the heck is AI going to be able to do So I'm just a little bit scared. I don't know, but then again, I don't understand it well enough. Like I'm not an expert in AI, so maybe my fear is unfounded. But who knows? It's scary. But it's kind of like the trade-off. As like with any major advancement in technology or new initiative, there's benefits to humanity, and then there's like pros and cons, right? And generally, we just let things happen when the pros far outweigh the cons. It's like people driving on the road in cars. I mean, people have crashes all the time, and there's so many deaths on the roads, but we just allow it because the pros are just so overwhelmingly positive. Like to have cars for us to be able to drive around and go from A to B every day easily. It's like the pros so far outweigh the cons that we just like, yeah, just do it. But it's like, I don't know. I mean, I'm sure the pros will far outweigh the cons of AI, at least initially, until it kills us all. But it's like, I still feel like there are some pretty decent cons with AI. So where do we draw the line? How do we safeguard it? I don't know, man.
Yeah, I mean, it's just very obvious that like OpenAI or any of these companies, it's very obvious none of them have any control over the safety aspect of it. So we're kind of just there. Whoever's trying these things is like the testing dummies. So I think that's very obvious. I think that's like an important thing to recognize when you try any of these products. Is like it is a very massive unknown, and so don't put any like passwords or anything into this stuff.
Don't be silly with it. Yeah, cool.
Yeah.
Interesting story though. Interesting story. Shall we keep talking about another company that's got their both hands deep in the honeypot of AI in Tesla?
Yeah, what's been I've been reading a lot about Tesla recently. There's been a lot going on. Yeah,
they've just had a few quarters of poor revenue. Obviously, there's been a whole lot. There's been a bit of a demand issue. People haven't really been buying their cars as much. We're seeing a lot of competition ramp up. BYD is a very big player now. And then combine that with kind of a lot of negative sentiment about Elon politically, people boycotting, people lighting Tesla stores on fire, that kind of stuff. Like it's been a bit of a time for Tesla, but this quarter, pros and cons. It says here Tesla reported a 12% increase in third quarter revenue on Wednesday, following 2 straight periods of declines. However, earnings missed analyst estimates, pushing the stock down almost 5% in extended trading. So total revenue climbed from $25.18 billion from a year earlier. Automotive revenue increased 6% to $21.2 billion from $20 billion in the year ago period. Net income, however, fell 37% to $1.37 billion or 39 cents per share from $2.17 billion or 62 cents per share a year earlier. The profit drop reflected lower EV prices, a 50% increase in operating expenses, which the company said was in part due to artificial intelligence and other R&D projects. The end of the quarter also coincided with the expiration of the federal tax credits for electric vehicles, which were eliminated with Donald Trump's spending bill. That pulled sales forward into the quarter as consumers rushed to take advantage of the incentive before it went away. And we can actually see that in the chart that I've put down here. So Hamish, you can have a look at the Model 3Y production and deliveries chart, and we can see total deliveries. This time, same time last year, 462,000. Then Q4, 495,000. Then Q1 drops substantially. Q1 is seasonably weak for the automotive industry. 336,000, so a big drop off, 495 to 336. Then it recovers 384, and then you get this monster quarter of deliveries, 497,000 deliveries. And if you don't have context, you're like, oh yeah, we're back, baby. We are so back. But yeah, I think that EV tax credit was worth something. It was worth up to like $7,500 US or something.
Wow.
don't quote me on that. I'm sure it's around that figure. So it was quite significant. So you can understand if Donald Trump is saying this finishes this quarter, a lot of people that are on the fence that were thinking about, they're going to be pulled forward, kind of like that Netflix problem that they had when that was in COVID, right? People that were thinking about it just went, oh, why not? And they pulled forward a lot of subscribers.
Yeah. I think 2020 was like triple their. They added like triple the amount of subscribers the previous year, but then of course in the year after that, they added basically nobody.
Exactly.
Because effectively they just grabbed everyone who hadn't thought about it before because everyone's at home, and kind of everyone kind of gets pulled forward. So yeah, it is interesting to see. Yeah, somewhat of a similar thing.
So it's good, like for right now, for these results, it looks great. Because everyone's been pulled forward. That revenue number looks really nice. It's up. We've had 2 quarters of declining revenue, and now all of a sudden the bounce back. You look at the statistics, the total deliveries of 497,000 cars for the quarter. You're like, hell yeah. But there's always kind of that down the track consequence to pay. So we'll see. That's why it's kind of like an up and down sort of quarter.
Yeah, I guess like the next quarter or so, we'll kind of see what happens after the EV credits are gone. And yeah, it seems like it could be fairly meaningful to their sales. But I guess we'll kind of see. Hopefully the trend is the downward trend in sales is slowing at least.
Yeah, we'll see. Well, I'll talk a little bit more about that in a second. On Tesla's latest earnings call in July, last earnings call, Elon Musk and Tesla CFO warned shareholders about the impact of higher tariff costs and the expiration of the tax credits. Revenue from automotive regulatory credits in the quarter also fell 44% to $417 million from $739 million. So they're taking a decent hit now on the regulatory credit side. Even with the return to overall growth, Tesla's third quarter was marked by a continuing sales slump in Europe, partly driven by consumer backlash. His backlash against Musk, his incendiary political rhetoric and activism, as well as by competition from EV makers like Volkswagen and BYD. The stock, which plummeted at the start of the year, has rallied back and is now up 9% in 2025, but that still lags major indices and most of its mega cap peers. So I wanted to talk about that a little bit. So they mentioned competition. And this I find really interesting. Hamish, scroll down and have a look. I've put a chart here of market share. And this is published by Tesla. This is their own data. And as you can see, kind of through 2020, 2021, 2022, Tesla was just gaining market share in a massive, massive way. And then really over the past, 2 years, their market share has really begun to fall. And this is their statistics too. This is their published data. So you can't really argue with it. This is what they're admitting. US and Canada dropping market share, Europe declining market share, which is getting quite steep over the recent quarters. And in China too, it's plateaued and is now starting to decline over the last 3 or so quarters. So, we used to laugh at the idea of competition because, a few years ago, there was no real competition. We're talking like 2015 to 2020, around that time. I mean, competition was not great. And most of these companies the products they were putting forward were just not comparable in the slightest. But now they're catching up. And so in terms of when we think about what Tesla is right now, they sell electric cars. That's where they are right now. I know where they're going to be in the future is another story. But when you look at that, it seems like there's much more competition. Market share is not a given anymore. There's more choice. People are spending their money wisely. So when you think about Tesla as that car manufacturer story, I don't think it sounds as juicy anymore. Yet the stock is still really crazy. And we see like the PE ratio is something like 250 right now. And that just further emphasizes this idea that people are just all in on this idea of robo-taxis for Tesla. And this whole idea of forget about the cars, forget about what they're selling right now. The real value is in the AI in the automation, in the humanoid robot, in the long term, in the cars driving themselves, because that's the one thing that Tesla has that all the other car manufacturers, the BYDs and whatever, don't, is they don't have the full self-driving. So I find that interesting. I'm not going to stand here and make a call, but definitely just from looking at these results, you can tell that people are seeing it as a robo-taxi story. So that kind of leads you to absolutely. A bottleneck where it's like, well, if that doesn't happen, then you got problems.
Yeah, I mean, the stock's, I think, arguably very priced with like all that speculation.
I can't see it anymore.
The stock's so high. This chart's actually interesting because I didn't actually know that they published market share data like this. Maybe this is like a kind of a new thing that they're doing. But yeah, I think if you look at this chart, I'm not surprised at all like where the point of the top is. Just because I mean maybe it's a coincidence, but I think that's probably end of 2023, start of 2024 is probably when Musk started to become very, very political on in the media, or I mean, he has been for a long time, but yeah, particularly like that lead up to the presidential election was where it kind of went quite a bit further, and so I feel like over that time, the Tesla brand has somewhat been associated more strongly with like Musk's political views. And I particularly think that's how a lot of people in Europe feel, and that's probably why the market share has kind of drifted down. But you're right. I mean, at the end of the day, it's like the car business is not even a fraction of the value of the price of the stock at the moment. So none of that really matters if if they're able to do what they say they're going to do in terms of robo-taxis and Optimus and all this other stuff.
Surprise, surprise, that is exactly what Elon Musk spent his whole opening address talking about on the earnings call. It was just talking about Optimus, talking about full self-driving, and just doing his usual like Elon pie in the sky talk where he's like, I don't quite think people understand how big it's going to be. He's just hyping it up to no end. But I mean, the interesting thing now is, up until this point, it's just been like, oh, we're so close to FSD, we're so close. And it's been like, we're so close for 10 years. But the interesting thing about right now is that actually FSD is so close. Like it's actually out there and people are actually using it, and it is driving people around by itself in a pilot robo-taxi. So now is like where the rubber really meets the road, This is where it gets super interesting to see whether the stock price is justified. We'll see. We shall see. The next few years are going to be huge.
Yeah, it is. And the other thing I saw at the moment is there's a lot of chatter about Elon's new compensation package. I think I think you spoke about this maybe a few weeks ago, but
I don't know the update.
I've been seeing a lot of this on Twitter. I don't exactly know where. I didn't look it up, so I don't exactly know when the vote for this is, but I think it must be this week because there's a lot of chatter about it.
Right.
But if he hits all of the essentially it's going to be similar to his previous package where he has these tranches of market cap that the company needs to hit. And I think the top tranche effectively would pay him $1 trillion in stock, which is an actual crazy number. And I've been seeing a lot of this on Twitter because there's quite strong opinions on both sides. Some people say, hey, you know what, like Musk should, if we want him and his attention at the company, this is what we got to pay him. Which is, it's a good chunk of stock. I think it was maybe, I don't want to get numbers wrong, but I think I think he would have control of, 25% of the company. Yeah, so the proposed plan would be to grant Mr. Musk up to 12% of Tesla stock worth $1 trillion if the company hits a target market cap of $8.6 trillion.
Wow.
So
I think the vote
$1 trillion
is,
pay package.
and it's coming up on the 6th of November.
Okay, yeah. So that makes sense why I'm seeing like a lot of people like putting in different arguments as to what's acceptable, because I mean even the lowest tranche is if the company hits a $2 trillion valuation, which I believe is, and that's at any, I don't know, actually, I think it was over the next 10 years if I'm not mistaken.
Right.
Someone worked out that from this point it would be basically a 2.5% rise in the stock per year you would have to achieve to get to the first tranche. And the payout is 20 billion in stock. And so there were some people making some arguments that some of the lower tranches are not that great for shareholders. And, people were coming back and saying, well, that's because the stock has already risen so much. And so, it's already reflecting some of the value. But
that's a good point.
I did, it's certainly the biggest pay package it would be ever by quite a margin. But that's what
wild.
It takes to get Musk. I guess that's what it takes.
Yeah, we'll see. Yeah, very interesting. Then again, people say it's worth it's a $1 trillion pay package for him to get the company to what market cap did you say? Something like 8 trillion?
It was 8.6. So I think it was a 4-fold, 5-fold in the stock.
What did I say their revenue was in total? I said their revenue was 20-something billion. Where was it? Right now, this is not even their profit. Their profits, net income was 1.37 billion for the quarter. You can annualize that if you want and get it to, what's that, like, I don't know, 6-ish.
Yeah. I mean, what's like a $9 trillion market cap with a 20 PE ratio would be $450 billion in profit. And what did you say they're doing? 1 or 2 billion?
They're doing 1.3 a quarter, 1.4 a quarter at the moment.
Hey, but hey, it's possible. It's possible.
Yeah. I mean, I like Tesla. I hope they do it, but yeah, that's an uphill battle.
I do too. Yeah. No, I like Tesla. I like Musk. Yeah,
We'll see.
I don't know, but I'm an outside observer, so I don't know. I don't have any stake in in it at all.
Yeah.
So.
All right, Hamish, send it. Tell me about Hamish's meme stock of the week.
Yeah, the meme stocks are
they're back
they're still
somehow.
We're still getting one every couple of months. We're not getting the 2021 mania anymore of GameStop and what was it? Cinema stocks and
GameStop,
and
AMC.
Yep. Beyond.
Bed Bath and Beyond.
Bed Bath and Beyond. Yeah. So there's we're not getting as many anymore, but we've still got a couple. Beyond Meat is this week's
Beyond Meat. Yeah. I feel like this has been a kind of a buzz stock sometime like previously. Oh, sorry.
No, you're correct. You're correct. You're right. You're remembering correct. Yeah, so this actually was one of the stocks that was in the original 2021 meme stock mania, and it kind of went away for a long time, and now it's back. So, to give a bit of a background on Beyond Meat, they're like an alternative meat company. They sell like patties and that sort of thing, and a lot of restaurants also use them now as an option. It's like an easy way to offer a vegan or vegetarian kind of option, is rather than making their own patty, they just use the Beyond Meat patty, and it has a bit of branding to it itself. And so a lot of companies kind of do that. But they went public in 2019. The stock peaked at $235 per share that same year. And I remember back in 2019, there was a lot of chirp about this stock on social media. Few prominent creators were talking about it.
Look at you dance around this issue. Look at you being so reserved and politically correct.
Yeah, I'm just being politically correct. But effectively, the company has never been profitable, and sales peaked in 2021 and have fallen ever since then.
Really?
The stock is down 98% from its peak. So you're right. It kind of had its mania back in 2020, 2021. It was
That's
also
hilarious.
COVID, so everyone just downloaded Robinhood and was happily trading these ridiculous stocks and using options and that sort of thing. The stock's down 98%, but it's back.
Wow.
It's back. It's back this week.
All right. Yeah, that's the key word. It was down 98%.
Yeah, exactly. Now, no, well, actually, it's down 98% after it rose 400% this week. So the stock's up 400% this week.
Oh, wow. 400%, dude.
Yeah, but it's still down 98%, unfortunately. Because yes, if the stock goes down 99.9%, it has to go up a lot in order to get back. But
I wonder if anyone's made a YouTube video about it so far. Beyond Meat stock. I wonder if this particular creator has moved on from Beyond Meat. Looks like they've moved on.
Yeah. Well, I mean, when you have two alternative meat stock, you have Tattooed Chef and Beyond Meat, but Tattooed Chef went bankrupt, I think. So
did they?
That's
crazy.
Yeah. So when you have two out of two, I think maybe just leave it. But anyway, this week on Wednesday, so as a part of this 400% stock rise, on Wednesday the stock doubled, and more than 2 billion shares of Beyond Meat were traded on that day. Making it the second most traded name among US stocks on Wednesday. So,
wow,
a lot of activity from the stock. The surge followed the company's announcement that Walmart would expand the distribution of its product, including its new 6-piece value pack, to more than 2,000 stores. So that's it. That's all it took.
That's what it is.
Walmart says, we're going to expand this product in our stores. That's it. That's all. That was it.
Probably worth 417%. Yeah.
400% rise just on that. So, and the value pack, the new 6-piece value pack.
The 6-piece value pack. Jeez, that could almost be another 400%. Just that in itself, you know.
That's slap a $10 billion valuation on it.
Jeez. How come that didn't happen to McDonald's when they came out with the 20-pack of McNuggets? Or the 40-pack of McNuggets.
Yeah, we're doing 40 now instead of 20. It just adds like 10 billion in value.
The stock's up 400%. Oh god.
So retail traders are largely behind this move. I'm shocked by that. I was looking at.
Are you kidding me?
I don't have the chart here for it, but I was looking at the daily options contracts traded for the stock, and it's like. On Wednesday, most days were like 10,000 contracts, 20,000 contracts. There was one peak that was 200,000 contracts, like from a couple years ago or something.
Yep.
On Wednesday, 2 million options contracts were traded.
2 million?
So this chart is like, you can't even see anything, and then there's just a huge spike.
Wow.
So 2 million option contracts, which is, that represents 200 million shares behind those options. So I think that gives you a bit of a window into the fact that, yes, a lot of this is just retail kind of gambling,
it's gambling
on the stock.
Yeah.
And actually, even to give a little bit more validity to the fact that it definitely is a lot of retail, one of the most popular contracts being traded, so these options contracts are effectively bets that the stock's going to rise to a certain price by some kind of short-term date, like in a week's time or in a month's time or something like that. One of the most popular contracts at the moment being traded needs the stock to go from $4 a share to 40, which is like a 1,000% rise. And so, and if it doesn't go to that, the option expires worthless. The people lose 100% of their money. So,
jeez,
that gives you a window into the kinds of bets that people are placing. It's very speculative. It's very long shot, buying a lottery ticket that this stock's going to go up
Definitely.
10 times in value in a month or something like that.
Yep.
And that's kind of been behind the stock rising, 450%, I think, in the last week at its peak.
Wow. So the question, Hamish, have you been buying?
Of course. Yeah. Didn't I just say 2 million options? Yeah, that was me.
Dude, we don't have that much influence. We're trying to pump the stock.
No.
There you go, man. It's so crazy. Why are people just betting so hard on these? I don't know.
Yeah.
Go bet on an NBA game or something. Why do you find that less interesting than betting millions of dollars on a fake meat company share price rising? God, at least in one you get to go watch some NBA.
Yeah, that's actually true. At least do some sports betting.
Yeah.
At least go broke while you're watching. Your favorite team.
Yeah, exactly. Anyway, that's crazy. Is that all we've got for that one?
Yeah, that's it. That's that's it.
Oh my gosh, I just saw the chart that you've posted at the bottom there. So that's Beyond Meat before this rise? No, that's including
after
this rise.
Yeah, that's including the rise. So
Holy
down 90.
So
all time down 95%, but from the peak, that peak in 2019, it's not down 98.5%. So it had a peak valuation, I think, of over $10 billion for a company that was never profitable. I think they were doing a couple $100 million in sales or something at its peak. So obviously an insane valuation, ridiculous. I mean, for an alternative meat company to be valued at like 10, 15, 20 billion dollars, how big do they think that market was going to be? Like, it was just going to overtake the entire meat market.
Well, what's McDonald's?
Maybe like 180
okay,
billion.
they're massive. Sorry, they're massive. Yeah, but even still, comparatively, they're 220 billion. I thought they were smaller. There you go. Anyway, crazy, Hamish. Well, good luck to them. Man, we're going to feel silly when we come back next week and say, Beyond Meat stock, now $40 per share.
Yeah, hopefully my bets pay off. We'll see.
We'll see. We'll come back and see.
My YOLO 1,000.
We'll see if
stock needs to rise 1,000% bets.
We'll see if next week Hamish is podcasting from the top of the Burj Khalifa in Dubai.
Yeah, there will be signs. I won't tell anyone. There will be signs.
All right, man. Should we bounce? Should we get out of here?
Yeah.
Yeah, good stuff. Thanks very much for watching, everybody. Thanks for listening. Thanks for tuning in. Sorry we've kind of been here, there, and everywhere over the last little while. We'll keep doing podcasts. We're trying to go a little bit less on the strict regular schedule because we've just been so busy doing all sorts of stuff. But we'll try and keep getting some podcasts to you over the end of the year. So keep watching, keep tuning in, and thanks for tuning in to this one, and we'll talk to you guys in the next episode.
See you guys.
Mm-hmm.